Hello and welcome back to the Geordie Pig Investor channel. Today we are going to have a look through my portfolio as I have hit a new massive milestone within the portfolio, a monumental number that I didn't think would be possible to hit this early in my investing career, but it has been hit thanks to staying consistent in the market, and that is, as you can see on your screens right now, a value of £30,000. I started investing around 16 months ago. It was at the end of August in 2023. We are now in the middle of November in 2024, and wow, to hit £30,000 portfolio value in my ISA account is such a good achievement that I didn't think I'd be able to hit within my first year and a half of investing. I thought this may take a couple of years to get to, but it just shows what can be done if you really put your mind to it, focus in, make sure that you invest first when you get paid, and prioritize putting money away for the future. As you can see, my overall returns is over 6% right now currently, returning over £1,700 in the portfolio. And in today's video, I will go through what stocks have brought me to this figure and my thoughts on all the stocks that I currently own and what my plans are moving forward with the portfolio. So alongside having a return of £1,700, if I come across to here and go onto the history tab, I can show you my orders and we can see I have a realized profit and loss of just shy of £200. So that brings me to around about £1,900. And then my dividend payments are close to £500 as well. So we are looking at nearly being up close to £2,500, which is really good to see. And I can't wait to just continue investing into my portfolio, hopefully seeing it continue to grow, set myself up for the long term. If you didn't know already, I am mainly a dividend focused investor. So all of my investments in my portfolios are dividend stocks or ETFs, and I am focused on mainly building up my ETF positions as my core of the portfolio, and then buying individual stocks that I believe are undervalued, that are dividend paying stocks that over the long term I believe will pay a very nice dividend yield alongside have a good dividend growth rate, which means once I have enough money coming in from dividend payments, that will be self-sustained through this and I will be work optional. Obviously, that's a long time away, but it may come round sooner than you think, especially if you can really start to focus on your investing journey and put a lot of time and effort into it. I'm currently 23 years old, so to have a £30,000 portfolio value alongside I actually am a homeowner as well. I own my own house. I'm in a really good position, to be honest, as a 23-year-old, and I'm very happy at my current job, which is always good to not hate your job. So I feel like I'm in a really strong position and I just want to continue adding to this portfolio. This is in my ISA account, like I said, which means it is all tax free as well. So if we have a look over the last year, we can see a year ago my portfolio value was a measly £4,400, and when we fast forward the full year, we can see it is now up to £30,000. You can see there was no crazy money added. It was just being consistent week on week, adding a few £100s every single week. And it has slowly grown since then throughout this year, all the way up to that total of £30,000. If we go into my actual portfolio itself, my first pie is the ETF and chill pie. Obviously going to be my ETFs in here. So we have 4 ETFs in this pie. We have my Vanguard S&P 500 fund. We have my Vanguard FTSE Developed World fund. We have my JP Morgan Growth and Income fund. The Vanguard FTSE All World, I'm actually stopped investing in, hence why it is just a 1% allocation. I don't actually want to sell out this position because I have over £3,000 in there. It pays a nice dividend and I'm happy to leave it in there right now. So that fund will stay as it is. But I am instead investing into the Vanguard FTSE Developed World, as I believe this fund is actually slightly better allocation than the All World. So over the long term, I should see slightly better returns from this. And then obviously I have my S&P 500, which I continue to invest in every single week. And I've also opened up a position in the JP Global Growth and Income Fund because this is a slightly higher dividend yield ETF. So we can see that the yield on this is actually 3.32% and it is very low beta, so it's not very volatile and does have quite a good yield. With me being a dividend focused investor, I get a lot more motivation and it keeps me wanting to invest when I see my predicted annual dividend income going up week on week. So I do like to invest into ETFs that will pay me a slightly higher dividend alongside the stocks, because this is just going to keep me motivated and keep me investing into the market. We can see I've got a little buy order here in on Legal and General. I've currently got that in at just under £2.16, as we can see here, which I'll hopefully hit today. So that means that I'll have an extra £50 in Legal and General. While it is under that £2.20 mark, I am going to continue adding in this position every single week. So I'm hoping that this stock actually just continues to drop from this price. It pays a very, very high dividend yield. If I show you right now, we can see it's up at nearly 10% dividend yield right now. And it does actually have quite a good dividend growth rate as well, all things considered. So it is a stock that I am very, very much bullish on over the long term, and it does like to yo-yo up and down in price. If I show you over the last year, we can see it goes all the way up to 250 a few times, back down, all the way back up, all the way back down, and it has done this a few times throughout the last year. I was able to buy in actually at quite a good price initially, so that's why my average price is roughly sitting at where it is right now, as we can see right here, and I'm hoping to get this position up to around about £1,000, so we will hopefully see that happen over the coming weeks and months. If I take you on to my next pie, it is my UK growth dividend stock focus pie. This one is now currently in the red. Since the UK budget came out, it really has took a hit the UK markets, and everything just seems to be in the red. We can see I have actually quite a lot of red positions in here now, considering it used to be nearly all green positions. But like I've mentioned earlier, these are stocks that I am happy to buy into. I'm comfortable with the prices that I've paid for them, and with that it means that I am confident in the future that these will all recover and they will eventually be green positions in my portfolio. So while they're in the red, I'm very, very much happy to continue adding to these positions, especially ones such as Greencoat UK Wind, which pays a very, very nice dividend yield. Safe Store as well, which is actually a UK REIT, which I've always been in the green on, so it's finally come down to a price which is more acceptable for me to buy back in at, and that has a dividend yield now at 3.8%. Definitely one which I'm going to consider buying a little bit more into. As long as I believe the stocks are undervalued, I will continue to buy into them. This is another ETF that I have in here. This actually pays on a monthly basis and has close to around about a 6% dividend yield, so I'm very happy to be receiving that, especially as it is quite low volatility, to be getting 6% per month on this. And we can see it's actually slightly in the green as well, so I'm going to really try and add to this position and continue to receive my monthly dividend payments from them every single month. And then finally, we have my US growth dividend stock pie. This one is obviously performing a lot better than the UK growth dividend stock pie, mainly because a lot of my US stocks are a lot lower dividend starting yield, but have very, very good long-term growth, which is what you get with the US market compared to the UK market. The UK market is very much more focused on stocks that already have a very decent yield and pay a slightly less on the growth side of things. But I feel I have a very nice mix between my two pies, and I'm very happy with my allocation between them. So we can see in this one, I do actually have two European stocks, one being ASML and the other one being Louis Vuitton, and ironically they are actually the two stocks that are in the red right now. Louis Vuitton is just crashing right down, is now back down at 585, so this is going to be a stock I will add to this week, as that is just so cheap for Louis Vuitton. I've done my stock analysis on them and they are definitely worth a lot more than that, and I believe over the long term they are going to recover at prices much, much higher than that, so I'm very happy to continue adding to that position while they are down at that point right now. And you can see the rest of them are actually all in the green as of right now. Nike just being slightly in the green, a new position that I added lately, so it's nice to see that actually recovered back up into the green. And we can see Vici Properties has actually dipped quite a bit over the last month or so, being down nearly 4%, and that is the same with Realty Income. If we have a look, yeah, that's actually down 6% over the last month. If these stocks continue to drop, which I kind of hope they do, again, I'll be adding more capital into them, because that is going to be getting closer to a more attractive price for myself, and the rest of them all performing very nicely. So that is my overall portfolio. The goal moving forward is just to keep doing what I've been doing, to be honest. There's no secret to it. It's just adding new money every single week, trying to spot out opportunities. If there's no opportunities available, that's when I fall back on my ETFs and just invest my money into them, and they just continue to keep rising. The S&P 500 being an all-time high right now. Yes, there may be a market correction over the next few months. Yes, it may go into the red for a little bit, but long term, over the next 3, 5, 10 years, I believe these types of stocks that I'm investing into have all got good core fundamentals. They're all going to be increasing over that long term, and I'm going to reap the rewards in my portfolio, also receiving those dividend payments, which are going to start really having a snowball effect as they start to gather momentum and really pick up. We are also averaging over £70 a month now in dividend payments, so I can already start to feel that snowball taking effect. So that is the current portfolio. Like I say, hitting that new massive milestone of £30,000. Really proud to hit that by the end of 2024. Hopefully we can get this close to 32,000 by the end of the year now. I hope you enjoyed today's video. That is my breakdown of the portfolio. Let me know your thoughts on my current portfolio. What stocks would you sell out of, if any, and is there any stocks you'd look to be adding in? Thanks for watching. If you've enjoyed, please like and subscribe. This is the Geordie Pig Investor, over and out.